What if I told you that one of the most exciting offers in the market, the one that says pay nothing today, is actually designed to make you poorer? Not slightly poorer, significantly poorer. And the worst part, the people who fall for it the hardest are usually the ones who are trying the hardest to be smart with money. Here's a question. Imagine you walk into a showroom. There's a brand new car sitting right there, shiny, beautiful, and the salesman walks up to you with a massive smile and says, "Sir, zero down payment. Drive it home today. Not a single rupee needed right now." Your brain immediately does something very interesting. It stops calculating the total cost of the car. It stops thinking about interest rates. It stops thinking about the next 5 years of EMIs. Instead, your brain does one thing: it focuses on the number zero. Zero. Nothing. Free today. And that one number, that beautiful, harmless looking zero, is one of the most powerful psychological traps in modern personal finance. Oh, here's what most people believe. They believe that a zero down payment offer means they're getting a good deal. They believe it means they don't have to waste their savings. They believe it means they're being financially smart, keeping their money invested while the EMI takes care of the purchase. This sounds intelligent. It sounds like something a financially savvy person would do. But in most real-world situations, for most regular people, it's completely backwards. And this isn't just about cars, it's about phones, laptops, furniture, home loans, consumer electronics, buy now, pay later apps. Almost everywhere you look today, someone is offering you the magical gift of zero down payment. The question nobody asks loudly enough is, why are companies so desperate to give you this gift? Think about it. Why would a bank or a company be so excited to collect zero money from you today? Why would they smile so wide when you walk out without paying anything up front? The answer to that question is where everything gets interesting. Let's use a simple example to understand what's actually happening. Imagine you want to buy a phone that costs 60,000 rupees. Option A, you pay 60,000 rupees up front today. Done. Phone yours. No more payments. Option B, zero down payment. You pay 0 rupees today. And 2,500 rupees every month for 24 months. Most people look at 2,500 rupees and think, that's nothing. That's just one dinner out. That's less than my grocery bill, easy. But here's what your brain quietly skipped over. 2,500 rupees multiplied by 24 months is 60,000 rupees. But wait, that's before interest. With a typical consumer loan interest rate of around 15 to 18% per year, you're actually paying somewhere between 70,000 rupees to 75,000 rupees for a phone that costs 60,000 rupees. You paid more, not less. You paid a premium for the privilege of paying nothing today. Now here's where the psychology gets really deep. When you pay 60,000 rupees in one shot, your brain feels the pain. Psychologists call this pain of paying. It's real. It stings. And because it stings, you think twice. You ask yourself, do I really need this? Is this worth it? But when someone says 2,500 rupees a month, the pain shrinks. It becomes invisible. Each individual payment is so small that your brain barely registers it. The total cost, the real cost, quietly disappears from your thinking. This is called payment decoupling. When the moment of enjoying something is separated from the moment of paying for it, your brain treats them as almost unrelated events. You enjoy the phone fully today. The payment, that's a problem for future you. And future you, in your brain's calculation, barely exists. This is not a coincidence. This is design. The entire zero down payment system is engineered around the way human psychology works, around our very natural tendency to prefer pleasure now and push pain later. But let's go even further, because the interest you pay is only part of the problem. There's a second cost that almost nobody talks about, and it's the cost that quietly destroys wealth over time. It's called opportunity cost. Here's what that means in plain language. When you take a zero down payment loan and pay extra money in interest every month, that money is gone. You can't invest it, you can't grow it. It just disappears into the pocket of the lender. Let's go back to our phone example. Say you paid an extra 12,000 rupees in interest over 24 months. That's 500 rupees per month extra compared to just buying it outright. What if instead of paying that 500 rupees as interest every month, you invested it in a simple index fund giving 12% annual returns? Over 10 years, that 500 rupees per month becomes roughly 1,15,000 rupees. Over 20 years, closer to 4,50,000 rupees. You didn't just pay 12,000 rupees extra for a phone. In terms of what that money could have become, you paid nearly 1 to 4.5 lakh rupees depending on your time horizon. And remember, this was just one purchase, one EMI, one zero down payment decision. Now imagine making that same kind of decision every 2 or 3 years. A new phone, a new laptop, a car upgrade, a new sofa on buy now, pay later. Each time, you're not just paying interest. You're giving up what that money could have grown into. You're trading your future wealth, slowly, quietly, almost invisibly, for the coming. Wealthy people and financially free people don't think about monthly payments. They think about total cost. They think about what money can become. The zero down payment offer is fundamentally a product designed for people who think in monthly payments. Can I afford the EMI? That's the wrong question, but it's the question most people ask, because monthly payments feel manageable. They fit inside a monthly budget. They're comfortable. The right question is, what is the true total cost of this decision, including interest, and what am I giving up by not letting that money grow? That's a harder question. It takes more thought. It requires you to think about future you, and as we talked about, your brain naturally resists that. There's a reason consumer finance companies spend billions of rupees on advertising zero down payment schemes. It's not charity. It's one of the most profitable products in the financial world. They are selling you the illusion of affordability while quietly collecting more than the sticker price. And they're doing it with your enthusiastic participation. Here's another layer to this. Zero down payment also affects your relationship with the thing you're buying. When you pay nothing upfront, you feel less psychological ownership over it initially. You're more likely to upgrade again quickly, fall for the next shiny offer, and keep the cycle going. It's designed to be a cycle. The goal is not for you to buy one phone on EMI. The goal is for you to always be on EMI, for your monthly cash flow to always be tied up in payments, leaving you with very little to actually save or invest. A person who is always on multiple EMIs is a person who is always one financial shock away from stress. And a person under financial stress is a very reliable future customer. So what should you actually do with this information? First, always calculate the true total cost before any purchase on credit. Take the monthly payment, multiply it by the number of months, and compare it to the cash price. The difference is what you're paying extra. Write it down, make it real in your head. Second, ask yourself the opportunity cost question. If I invested this extra money instead of paying it as interest, what could it become in 10 years? There are simple SIP calculators online that take 30 seconds to use. Use them before signing any loan document. Third, build what's called a purchase delay habit. For any non-emergency purchase above a certain amount, say 10,000 rupees or 20,000 rupees, give yourself a 72-hour waiting period before deciding. In those 72 hours, the emotional excitement fades and clearer thinking returns. Most impulse EMI decisions don't survive 72 hours of calm thinking. Fourth, if you must use a loan, always choose the shortest possible tenure. Longer tenures mean lower monthly payments, which feel comfortable, but they dramatically increase the total interest paid. A 48-month loan always costs you more than a 24-month loan for the same item. Always. And fifth, be particularly careful with buy now, pay later apps. These are zero down payment schemes optimized for speed and frictionlessness. The easier and faster a payment system is, the less time your brain has to engage its logical thinking. That's not a bug. That's the feature. Here's the thought I want to leave you with. Financial freedom is not about how much you earn. It's about the gap between what you earn and what silently flows out. In interest, in impulse purchases, in invisible costs you never fully calculated. The zero down payment offer feels like a gift, but it is really an invitation to trade a little bit of your financial future right now for the comfort of paying nothing today. And the really quiet, really uncomfortable truth is this. Every time you say yes to pay nothing now, you are saying no to something else. You're saying no to that investment that compounds quietly in the background. You're saying no to that financial cushion that would let you sleep easier. You're saying no to the version of yourself 5 or 10 years from now who has options, who has choices, who isn't stressed about money every month. Future you is watching every decision present you makes. The zero is not free. It never was. It just costs you later, quietly, slowly, and with interest.